Curran Investment Management is taking a new approach to investing by examining the past. They have been studying the worst markets since 1888 and say taking a look at the marketplace and the time period immediately following can lead to a better financial future. Joining us now is Tom Curran. He's the Chief Investment Officer for Curran Investment Management. Thanks so much for joining us again. Now, this was interesting. Who decided to go and take a look back?
It was my thought. I'd done a little bit of this sort of work in the past, and I thought it would be interesting to see how today looked against periods that went back as far as 1880.
Okay, so let's go back. What did you find?
What we found is that there have been 5 times in our history going back to 1880 when the market actually declined over a period of 10 years. That is, an investor in 2008, for example, made no money. They actually lost money from 1998 through 2008. That has happened in 5 periods going back to 1880. The most famous, of course, would be the 1929 crash in the 30s. And
so by looking at this, then are you able to gauge that 5 years, 2 years, 3 years, things start picking up? I mean, what were you able to glean from this?
What we find is that when the markets decline, reflecting the economy for long periods, as this period would indicate, the period following, the 10 to 15 years following, have always been quite good. And at the peak, and again, we go back to 1998, peak returns were annualizing at well over 20% during that period. Of course, following was what we're in now. We would expect that at the end of one of these cyclical, secular declines, long-term declines, that the market will in fact do very, very well over the next 10 years.
So we're talking, let's come to full circle and come to where we are now. We're expecting, the markets have rebounded and have done really well, and some people have been very encouraged by this, saying that they think that we're moving ahead and we're kind of out of what we were in. Do you, first of all, and what do you say to people your investors?
Well, what we say to investors is their intuition, their gut feeling right now is to avoid equities, to get out of the market, to get even. And we're trying hard to tell people that this is the time when the best probability for high returns is likely to be from this point forward. So we're trying to demonstrate that if the market averages 10 to 11%, and we all agree that that's pretty much the number going back in history, and we've had a period of 0 or less return for the past 10 years, the only way we get to those very high 10, 11% returns is what follows. So this is very, very important for long-term investors to keep the faith and stay in there.
Have you spoken to investors already? Have you put this information out, and what's been their reaction?
Yes, we have put it out. As a matter of fact, we've put it out and it's been received skeptically.
People are just still afraid.
Yes, they are.
Yeah. Okay. You can get more information about this study on your website?
Yes, you can.
Okay. If you have any questions about this study or this broadcast, we'd love to hear from you. Just email us at midday@wnyt.com. We have set up a link. We will link to Curran's website. And the day's top stories are just ahead. Stay with us.